how do you play the down move? Do you play the ones which have rallied on hopes of interest rate cuts being the first casualties? And therefore, would that also include the tech and the platform companies, which are a direct play on what rates do because it impacts the multiples that way?
Yeah, I mean, reading through the RBI minutes, I mean, obviously, they are worried about inflation, and you mentioned about the rupee as well. But whilst they're defending the rupee, import covers now around 9 times, which is, if it gets towards that 7, alarm bells will start ringing somewhere in the government and the RBI. So that's something you have to watch out for from a negative kind of impact for India. But I think I think in terms of the sectors which will continue to do well will be those same sectors I mentioned. But obviously you've seen some very strong moves in those sectors. So I'm sure that's where you're going to take profits off the table and maybe hide in FMCG or IT in the very short term. IT, I'm still not convinced about, even as a hiding place. It still could be a hiding place in the falling market, but I think the tech fallout is still to happen in the US. I know we've seen prices kind of fall quite significantly, but I think again we could see that happen, and the IT sector is highly correlated at the moment to the tech sector in the US. So you can't walk up a down escalator when sentiment's against you.
Okay, one final question, Andrew, and that's on consumers. Now, Q1 numbers showed that some of the consumer companies had, at least the discretionary consumption, had a really good quarter. We typically see that around the festive season, these things tend to do well. The pure consumption is good. Whether or not the stocks do well is another thing. My question to you is, are we on the back of a base of 2 years wherein people bought goods as opposed to services, and therefore could this time around be different? Part one of my question. Part two, do you believe that the continuation of the trend of QSRs, theaters, hotels, etc., could well continue because revenge travel, revenge eating, revenge entertainment might not have gotten over so soon? At least Q1 didn't show signs of that.
No, I think just on the second point, I think we're usually 6 months to a little bit longer, behind developed markets in terms of their reopening. So I still think the kind of spending money in India will continue. I still think we want to have more experiences. Traveling overseas is not so enjoyable in terms of airports and costs of flight. So I think we will see the more of the same in terms of domestic consumption, and that's the good news. And you're right, we're coming into the festive season. I did a bit of homework, about a month or so ago, looking at some of the new cars which were being launched, and the Mahindra kind of SUV. Now it might have changed since then, but I was told there's a 2-year waiting list. But there seems to be 1-year waiting list for everything at the moment in terms of cars. So that's the strength of the consumption pattern that we're going to see. And of course, those companies are going to be helped by lower input prices going forward. So I think we'll start to see some kind of discounting ahead of the festival season to try and get volume up there, and to try and help the fact that margins are still going to be impacted to some extent. So you try and get the volume through to get your operational gearing higher. So I suspect that will be the case. My one fear is that as commodity prices fall and you get the kind of the expected tailwinds for these companies. If you look in history, if you take FMCG companies, they sometimes use this opportunity to try and gain market share, so they bring prices down, and don't really kind of take the margin, increase onto their books, rather than so they just try and take market share. So there could be a bit of a price war in certain sectors, as companies say, it's worth trying to get more market share, and not try and get all these margins in the short term.